Hello, YouTube family. Good afternoon, good morning, good evening from wherever you might watch this video in the future from. So, it's your boy Popsy Trades here. In this video, I would just want to make it a very quick video, because I think that this is something very important, like very, very important and urgent. Yes, for everybody that is interested in trading, because this channel is all about trades, trading lifestyles, and everything that encompasses with trading. I just want to make it very quick and concise and precise too. Um, Good afternoon, good morning, good evening from wherever you might watch from. So I repeated it again just to warm things up. So the thing is, there is this idea of fear of missing out. I don't know if some of you have heard about it before. So it's something that is very little, but is very damaging to most traders. Yes, it's something that is negligible, like it doesn't seem important, but it's one of the most important things. Like it destroys trader. So something happened recently. That's why I got the idea of doing this video at all. So something happened recently. I was in a trade. Yes, I think yesterday. Yes, just decided to take some trades yesterday. So I was in a trade. I think volatility 100x. So uh, and before I got into the trade, I have done my analysis and everything was perfect. Like the probability was high. So and I was actually trying to sell the trade. The analysis was showing sell. So I waited and it got to my point of the points where I will sell. But I was having a very little equity in my account, my trading account. So I decided, okay, fine. Let me scale. My analysis is top-down analysis. I usually use top-down analysis because it's one of the best, to be honest. Yes, I start from higher time frame, then weekly, then daily, then 4 hours, and down to my entry. So I've done my analysis on the higher time frame, then I scaled down to 15 minutes and 5 minutes for my entry. But the thing was, with the amount of money, with the amount of equity in my trading account, I was somehow skeptical not to enter from the very higher time frame of 15 minutes. So I decided to come down to 5 minutes and 1 minute for my entry. So as I came down to 1 minute, I was seeing candle rejection at that point at my entry. Yes, I was actually seeing candle rejections. But the funny thing was, this is 1 minute, you know. So it was rejecting. Okay, let me first of all explain what FOMO is. FOMO is fear of missing out. Yes. When you have done your analysis and maybe you were actually busy doing some other thing and was watching the analysis to play out for you to get in, you know. But maybe some one or two things came up and uh, you forgot, or you actually didn't get in at the right point that you wanted to get in again. And the trade now went far away, like at least some good pips away from your entry, and you are not like, oh god, and you are seeing big long candles like it's going down. And if you are trying to sell and you saw long candles going down, you'll be like, god, I just don't want to miss out on this trade. I don't, something like that. You're not afraid, you don't want to miss out because you've calculated the pips, the pip that you accumulate from the trade if you eventually get into the trade. But uh you just don't want to miss out. That's the thing. So in order for you not to miss out, you just get in. You are not actually thinking rationally again. You are not rationalizing things again. You are not logically thinking again. You just want to get in, and you got into the trade. immediately, maybe just anywhere it is. At least you know where. For me, I usually take it as at least I know where the my TP will be. At least hasn't gotten there, so I just entered. And most times, what I've noticed is when you do something like this, it actually immediately you get into that trade, it will start retracing back. If it's a sell trade, it will start retracing back immediately. Like it won't take time to start retracing back, and that will simply put you in drawdown. And once you get in drawdown, immediately you click sell button or buy button, you start seeing drawdowns. That somehow messes up your psychology somehow, and you don't want that type of thing. You want something like you you just don't need it. You just don't need, because it messes you up, and you are now trading with emotion. So sorry guys. I just try to make sure to know if I'm actually recording, because there is this video that I did, I think day before yesterday, recorded for almost 15 minutes, and I was talking to myself. It's crazy. So back into what I was actually saying. So so at that point that you enter that trade, because you don't want to miss out, you don't want to for this beautiful setup to pass you by, you just put yourself in a very critical psychological state, because immediately you start seeing Jordan. And once you start seeing Jordan, it tends, most times, 99.9% of the time, it tends to mess up your psychology. It tends to mess up with how you now think when the trade is already going on. That is actually one of the terms on trade management, So you start thinking, being emotionally attached to that trade, because you'll be like, my analysis was right, and just because I missed the entry. Now, actually on a loss instead of profit, because if I have entered at my entry at this point, I would have been in a massive profit by now, something like that. So then you might now start thinking, okay, maybe if I if this loss increases to certain amount, to this amount, to X or Y amount, I'll just close the trade, and once you eventually close that trade, it start going to your direction. I don't know if most of you have noticed it, but it has happened to me time and time again. So that's why I decided to do this video. So so to be honest, I will, for the very new people in this industry, the newbies. I'm not saying that I'm a professional yet though, but from my experience, everything I record here, I record it because of my personal experience, not what I heard, not what I researched, no, because of what I have experienced in person in the market. So I just want all of you to be very careful of that, because yesterday it's actually to be honest, I want this channel to be as honest as possible. It actually blew my account yesterday, because I got in with the 5 minutes time frame, and I was waiting. After, later I will share my strategy here with you guys, just to record it, to document it. So, but I got into the trade, and I was in profit. Yes, I was in profit, in good profit though, not like very good profit, but I was in profit. But my target, my TP, where I was looking at the trade for it to get to, is not even half on the way to the place. So I was also okay, like, and I over leveraged, because I know it will definitely get there, but to my equity, it's the margin will not be enough to support it. But I thought, as it's already trending, it's already coming down, and it retraced a little bit, that you suppose it should start coming down again, most times, I want to make it clear, most times the market breathe in and breathe out. It inhales and exhale. That's why uh retracement doesn't scale professional traders. Yes, when the market is retracing, most professional traders are happy, like very happy, because it is now an opportunity to add more position to your trades, to the running trades, the ones that are already in profit. It's now an opportunity to add more trades to it, But for some, for the newbies, yeah, for the very new people, they don't know this. Even me, that has been in the industry for some time, for a very little while, I still find it difficult. But recently, I just have to accept the fact that the market inhales and exhales. So once I start seeing retracement, I'll just chill, keep calm, and wait for it to retrace. Then once I start seeing major candles, engulfing candles coming to the direction that I want it to go, then I'll start entering. So that is just it. So I want to make this video to tell you that no matter the market you are trading, no matter how beautiful the setup is, no matter how perfect the setup is, I just want to tell you that if you miss your entry, if you miss your entry, try as much as possible to wait. Yes, wait. Yes, I'm talking to you. Wait. Don't go in. Wait for it. Just chill. The market is not running. It's not going anywhere. It has been here before you started trading, and it will be here after you are done trading. After all your career in trading, it will still be here. So I just want you to wait. Don't trade. Wait. Give it time. It will show you another set. It will come back to retest, maybe to retest your entry and start going down again. Or it will retrace back, just retrace back to some point and start going down. Then you can go in. Yes. Don't go in because you're afraid that the market will run away from. If it eventually runs away from you and didn't retrace back to any point within the trend, it didn't retrace, leave it, forget about it. It's fine. It's fine. It is okay. Just forget about it. Leave it that way. Yes. The main important, the main important thing in trading is capital preservation. Yes. I learned it the hard way though. Yes. So, but now I'm more concerned about my capital, my the money that I came in with, than the money that I will make. I'm more concerned about the money that my capital than the gains that the potential gains that I will make. Yes. So I think whenever you see the market run away from you, or you have done analysis, and for example, sorry that I'm not sharing my screen with you, because I would have loved showing you this with a chat, live chat, it would be more practical. But sorry about that because I'm actually using my phone to record and I'm also using my phone to trade for now, so I'm sorry. But definitely, with God's grace, we'll get the laptop soon and we'll use that. Then I can share my screen with you. I don't know how to share my screen with the mobile phone. If any of you have an idea of how to do that, maybe you should drop it on the comment section. Okay, I would love to. Yes, I would love to. I would love to share my screen with you guys. So the thing is, when so in this industry, the most important thing is your capital preservation. The money you make is not important. Your risk is what will keep you in this market. Like your risk management is everything that will keep you in this market. That's why sometimes I watch some of my mentors and back then, like last 2 years, I usually watch them, or last 1 year and 3 months. I watch them, and most time I still watch them till now though. But then I usually watch them and I didn't understand this then. They usually say There is more in less. Yes. Why they say this is this. If you've seen a person that trades 4 times or 5 times in a month, that has a very good strategy, that has a strategy, yes, a strategy that is systematic strategy, that is the most important thing, and he trades 5 times a month, and you see the other trader and trader B trades maybe 20 times or 28 times a month with a very good strategy too. He has a good strategy, systematic strategy. You'll find out in the long run that the trader A that usually trade 5 times a month is tends to be more profitable than the one that trades 28 days in a month. Yes, because there is more in less. It is tested and proven. Yes. So I actually want to I that is the main reason of doing this video. I don't want you guys to fall a prey to this because it has happened to me. I've paid the ultimate price with my capital. Yes. Though it's not really that small though, but yes, it's price that you pay for knowledge. Okay. If you don't want to learn it the simple way, you learn it the hard way. So it's fine. So I'm actually doing this video to sensitize you people about it, to know about it that once price is it's far away from your entry, or it got to your entry and you didn't enter, maybe you were busy doing some other things, or you didn't forget to put your buy limit and everything, you just forget about it and you were waiting for the thing to get there, and at that point that the price got there, you were not there because you were busy doing one or two things. So it is best to just forget about the trade when you've seen that it's far away from your entry. Just forget about it. Wait for another entry. Yes, wait for another trade. Another trade will come. Definitely another opportunity will come. It is a must. Yes, so you don't have to rush in and rush out and try to get involved when the train has already passed. So it's best just to leave it like that. And another example is this: when you see a trade so another example is this: when you see a trade that you've done the analysis, you came into your chart, did the analysis, and everything was fine, and you are waiting for the opportunity for the setup to come up. We don't predict. We just react to price. Most times we will react. You can't predict the market because it's some probability. So you just react to what you're seeing, and you've done your analysis and everything lined up, and you are waiting. Okay, and on the line, while we are actually waiting, the price, maybe your analysis told you that you'll be entering at point 1.00 level, and eventually uh the price actually didn't get to that point the analysis say that you'll be entering, you know. So, and price eventually gets to the level of zero point 0.9. You know what? You should enter at 1.00, but price got to 0.99. Don't enter. Don't go in. Just forget about it. Yes, don't go in. Because once you go in, one, your mind, your psychology will be telling you that you've done the wrong thing because the rule says 1.0 and you are entering at 0.9. When the trades start going against you or start going south, your psychology will tell you you didn't do the right thing, that's why you're losing this trade. And then emotion will set in. And once emotion sets in, maybe eventually the trade will go to you, supposed to go to your to be in your favor. But once emotion sets in, you might close it at loss. And once you close it, it's lost. Because the floating loss is not yet lost until you close it and take the loss. That's when it is lost. So I just want to make it very clear. Okay. And I hope you guys understand uh, this concept very well. So thank you for watching and remember bless. Thank you very much. And please don't forget to share these videos. Share it because it is my story and I know that most of you are experiencing the same thing. So please share this video. It's very important. Someone it will help someone else. Share, comment, and please comment. Don't forget that. Comment, then like, then subscribe, and thank you for everything. And please, before I forget, very important fact: if any of you know how to share your screen, like do other things with your mobile phone while you record while you're recording a video, please don't forget to keep the comments down. I will check it and thank you very much. I appreciate and God bless. Love you. Peace.